Silver is more important than the West is leading on to, and that is why you see China flying around the world buying unrefined silver and shipping it back. That's why you see India buying 800 million thousand metric tons over the last 3-4 years. This is a situation where silver and gold are far more valuable than the currencies that purchase it. Much of the world understands this. We don't, and to try and play games and try and bottom feed and get lucky, it's not something that I think will go over very well, especially with such a small participation of the U.S. public. If gold and silver are doing what they have been doing, let's forget about silver because it's been held down. But look at gold, and silver will surpass gold in percentage terms, I believe, before it's all said and done. But if gold is doing what it's doing with positive real yield, forget about the nonsense out of the BLS and all that stuff, but a positive real yield, a strong dollar, and waning participation by the West, what happens when that changes? What happens now that we're pivoting and we're going to lower rates and we're going to weaken the dollar and we're going to reignite inflation? And, does the public wake up to this and start buying? It's rocket fuel. But much of what we see in the metals market is illusionary, unfortunately, because it's the antithesis of the system that has been allowed to rise unabated versus gold and silver, which have been stepped on. And although they continue to move, I would argue stepped on to the point where they have not been allowed to fully express themselves to their real potential. Even gold, which has outpaced the S&P 500, and doubled the performance of the 10-year treasury. Gold's 9.9% per year. It's up 20% this year. It's beating the tech industry. Where the hell is the mainstream media telling us?
Yeah, right.
What people need to understand about that chart, the red line represents the top 4 largest commercial banks and shorting the market, and the green is the top 8. So it's a combination of the 4 plus 4 more. So there you have it. You have 8 banks that have the largest short position in any commodity. Look at oil. I mean, it's just a blip, right?
Yeah, down there, 2 or 3
40 a barrel in
4 days production. Yeah, the y-axis is in days of production. Yeah, global days of production. Yeah,
right. And so the question is, why would they do this? And I think you need to understand this. And silver is far more strategic than they're letting on. It's used in all the high-tech weaponry, and we're selling weapons around the globe. Look at the money they just again gave to the Ukraine. It's 100% in weapons, and so they need silver in order to create these weapons. And that's the hidden secret. That's the smoking gun. And, you go back and look at the congressional meetings that they had in the 40s and the 50s that talked about the massive amount of silver needed for military. 200 million ounces a year they were talking about when weapons were nowhere near as sophisticated as they are now. So you ask yourself, why does silver do what it is? Why isn't it performing? Why is gold doing this and silver isn't? Why is it being stepped on? Why? Well, why are 8 banks shorting this when China's flying around the globe buying unrefined silver and India is buying 10 times the amount that is available for sale in COMEX and 2.5 times the amount that's available on the LBMA? Why? Because they know what we're doing. It's the exact same thing as the guy said in 2015 who runs the Shanghai Exchange. When China is allowed to speak at the table, the real price of gold will be known. It's the same thing as the guy who is now running the BRICS grain exchange. We produce more grain than the West does, and we cannot control the price. It's all controlled on COMEX, but this new grain exchange will change that. They know what we're doing with the metals, and they're beating us at our own stupidity. And if the public really knew just how stupid we are being by doing this, maybe there would be a little bit of a pushback. But you guys all out there know more than Fox News and the people who are supposedly trying to tell the public what's happening.
In recent years, the significance of silver has grown exponentially, but the Western world, particularly the U.S., remains largely oblivious to its growing importance. Meanwhile, nations like China and India have taken notice and are making substantial moves. China, for example, has been purchasing unrefined silver from around the globe, shipping it back to its own reserves. India, too, has been on a silver buying spree, purchasing an astounding 800 million metric tons over the past few years. What these nations seem to understand is that silver, along with gold, holds far more intrinsic value than the currencies used to purchase it. Much of the world is already catching on to this, but the West, especially the US, remains focused on paper currencies and artificially inflated financial markets. Let's dive into the crucial fact that silver and gold are not just commodities. They are stores of value. The fundamental difference between these metals and fiat currencies is that while governments can print more dollars, euros, or yen, they cannot simply print more silver or gold. These precious metals must be mined, refined, and stored, which gives them inherent value that isn't subject to the whims of policymakers. Andy Schectman, the CEO of Miles Franklin, has been vocal about this issue. He often points out that playing games in the metals markets, trying to time the lows and highs, or bottom feeding as he calls it, won't work well in the long run. The key is understanding that silver and gold are much more valuable than the fiat currencies we trade them for. They are forms of wealth preservation that withstand the tests of time in economic uncertainty. Despite this, silver remains significantly undervalued, and much of that is due to market manipulation by a few large Western banks. As Schectman explains, a handful of commercial banks hold the largest short positions in silver of any commodity, which has helped suppress its price. But this artificial suppression cannot last forever. At some point, the market will reflect silver's true value, and those who are holding physical silver will benefit immensely. Schectman points out that even though gold has been outperforming the S&P 500 and other financial instruments, silver remains an even more undervalued asset. With gold up 20% in just 1 year and outpacing the 10-year treasury, it's clear that precious metals are gaining momentum. Yet you rarely hear about this in the mainstream media. You might wonder, why isn't anyone talking about silver, despite its obvious importance? The answer lies in the hidden strategic value of silver, which countries like China and India fully understand. The U.S., however, seems content with its manipulation of silver markets, keeping prices artificially low. But that can't last forever. As Schectman points out, the high-tech weaponry that is being sent across the world requires massive amounts of silver, and eventually the suppressed value of this metal will be fully realized. China's actions in particular deserve attention. While many in the West remain focused on stock markets or even cryptocurrencies, China has been quietly buying up silver and gold, shipping it back home, and securing its economic future. It's similar to how countries like Russia have been buying gold to reduce their dependence on the US dollar. China's ultimate goal is to gain a seat at the global table where the real value of precious metals is recognized. As Schectman notes, in 2015, the head of the Shanghai Gold Exchange openly stated that when China is allowed to speak at the table, the real price of gold will be known. The same holds true for silver. Just like the West controls the pricing of grain through systems like the COMEX, they have also manipulated the pricing of silver. However, the tides are changing. China's influence, particularly in organizations like BRICS, which now controls a growing share of global grain production and metals like silver, will play a key role in determining the real value of these commodities in the future.
We've talked a lot about this, you and I, over the years, but in 2008, when the market collapsed, we saw immediately the price of gold and silver get clobbered. And gold fell from 1,000 to 700 and silver from 21 to 9. And one would think in an environment where the price of asset A and B fell by 30 and 60% respectively, that there's no demand for that it's being dumped globally and the price is just cascading down. But that really wasn't the case, because in 2008, every single mint across the globe was shut down. Ultimately, the US mint was shut down 7 or 8 times that year, and really was the model of inefficiency, much more so than they were the last 3 or 4 years. But it was much deeper in that. The Rand Mint in South Africa, for the first time in its 60, 70-year history, was sold out of product. The Perth Mint that summer, August on, took no new business. That's it, we're out. And the Austrian Mint and the Canadian Mint were anywhere from 12 to 16 weeks back ordered. The US Mint, at the time, I was very close with a man who's no longer at Prudential Beige. He was the gentleman who nominated us to be an authorized reseller. And I would call him and talk with him quite a bit. And I remember having conversations with him, and he would say, listen, man, there's nothing you can do. We cannot take any orders right now. We'll let you know when you can, but everything's gone. Now, what was unusual to me, and this has really shaped my view of the physical world is that the price was getting clobbered on paper, yet everything was gone. And it wasn't just that the mints were out of product. Refiners from Germany, or Ireland rather, would call me and say, listen, I've seen you before online. I know who you are. I've seen you at conferences. We have accounts at Delaware Depository, they would say. Our traditional supply chains in Switzerland and Germany are gone. They're dried up. We'll take anything that you'll give us. I would lay in bed at night and say to my wife, I think we're going out of business. I can't get anything. We can't place an order. And it also underscores, no one was selling. Nobody. I mean, nobody. And the public wasn't selling, even with the price getting clobbered. Nobody was selling. Everyone was freaking out. And I would say, what are we going to do? There's no secondary product. We've sold everything in our vault. We can't get anything. The U.S. Mint says, we'll call you, don't call us. And then I get a phone call from David Morgan, the David Morgan, who everyone knows, the silver guru, who I've been very tight with for a very long time. I owe David a lot. He helped me a lot in this industry back in the day. And this was another example. He called me up before he called anyone. And he said, I will hook you up if you want, before I let anyone else know about this. He said, there's a group here in Washington I've been working with forever. They've been recycling silver out of medical devices. They're called pyromet. They'd like to throw their hat in the ring. And they'll make 100-ounce bars. And these were the ugliest 100-ounce bars you've ever seen in your life. In fact, they just said 100 ounces. They didn't say what? 100 ounce what? And for months, and then he talked to some other dealers, pyromet 100-ounce bars were the only thing you could buy. Literally, the only thing that you could buy in North America. And this probably would have been July, August. By October, early November, the Royal Canadian Mint and the U.S. Mint finally started to say, all right, we'll take orders. With silver at $9 an ounce, you would pay $17 or $18 to receive your silver, and you'd wait anywhere from 12 to 16 weeks to get it. You had to pay up front. We can go back as recent as March of 2020 when the market collapsed. And what happened? I think it was pretty much coinciding, if I'm not mistaken. I think silver fell to $11. And you remember, you couldn't buy anything for short of $20 anywhere, and you'd have to wait, and you didn't know, there was uncertainty. So anytime that you distort reality, there is the unintended consequence on the physical market, where there are people who understand what's really happening. The value hunters say, I'll buy, thank you very much. And as the world is getting scarier,
the importance of silver extends far beyond its role as a store of value. It is a critical component in numerous industries, particularly in high-tech applications. This is especially true in the military and defense sectors, where silver is used in advanced weaponry and electronics. For instance, the U.S. continues to supply weapons to allies across the globe, particularly in conflict zones like Ukraine, where military aid is largely composed of high-tech weaponry. Each of these weapon systems relies on silver, a fact that's largely overlooked in mainstream discussions about military spending. In fact, going back to the congressional hearings in the 1940s and 1950s, the U.S. military openly acknowledged that it required around 200 million ounces of silver annually for its defense needs. And that was at a time when weapons were far less sophisticated than they are today. As weaponry and technology advance, the demand for silver will only continue to grow. So why is silver's price being suppressed? One reason is that the same banks that short silver are using it strategically. As Schectman points out, China is buying up unrefined silver, while 8 major Western banks take massive short positions in the metal. India, too, is buying silver at a rate 10 times what is available on the COMEX market and 2.5 times what is available on the London Bullion Market Association, LBMA. Clearly, these nations recognize the strategic importance of silver, even if the West continues to suppress its value. The manipulation of silver prices has been a long-standing issue, and it's not a secret to those who closely follow the metals markets. Schectman explains that the true price of silver remains obscured because a few Western financial institutions control the pricing mechanism. The COMEX market, where futures contracts are traded, allows these institutions to artificially suppress the price of silver through short selling. However, nations like China are not fooled by this manipulation. As Schectman recalls, in 2015, the head of the Shanghai Gold Exchange made it clear that when China finally had a seat at the global table, the real price of gold, and by extension, silver, would be known. This isn't just rhetoric. China has been positioning itself to play a larger role in global commodity pricing through its participation in BRICS, an economic coalition of Brazil, Russia, India, China, and South Africa, which is challenging Western-dominated financial systems. To understand why silver and gold are critical for wealth preservation, we only need to look back at the 2008 financial crisis. During that time, the prices of gold and silver plummeted. Gold dropped from $1,000 to $700, and silver fell from $21 to $9. If you were only looking at the paper prices, you might have assumed that demand for these metals had evaporated, but the reality was quite different. As Schectman recalls, during the financial crisis, global mints were selling out of their stock at an unprecedented rate. The US Mint shut down several times because it couldn't keep up with demand. The same thing happened at the Royal Canadian Mint, the Austrian Mint, and others around the world. Meanwhile, the paper price of silver was falling, but physical silver was becoming nearly impossible to acquire. Refineries in Europe and beyond were calling dealers in the US, desperate to buy any silver they could get their hands on, even at significant premiums. This disconnect between the paper price and the real-world demand for physical metals serves as a stark reminder of how manipulated markets can distort reality. Even though prices were falling on paper, those who understood the intrinsic value of gold and silver were scooping up whatever physical metal they could find. It was a classic case of market manipulation being exposed, and those who were holding physical assets were in the best position to profit when the market eventually corrected. Looking ahead, the future of silver is bright, especially as the world moves toward more sustainable and technologically advanced industries. Solar panels, electric vehicles, and renewable energy technologies all require significant amounts of silver. As the global push for green energy intensifies, so too will the demand for this essential metal. But beyond industrial use, silver remains a hedge against inflation and currency devaluation. With global central banks printing money at unprecedented rates, the risk of inflation and the devaluation of fiat currencies continues to grow. Holding physical silver and gold is one of the best ways to protect your purchasing power in such an environment. Schectman often emphasizes the importance of owning physical metals. If you don't hold it, you don't own it, he says, a mantra that should resonate with anyone concerned about the stability of the financial system. In times of crisis, when markets are collapsing and banks are struggling, having physical silver and gold can mean the difference between preserving your wealth and losing it. The writing is on the wall. Silver is no longer just a commodity, it's a strategic asset with both industrial and monetary value. While Western nations continue to suppress the price of silver through market manipulation, countries like China and India are stockpiling it, recognizing its true worth. At some point, this manipulation will end, and when it does, those who are holding physical silver will be the beneficiaries of a massive price correction. The lesson from the 2008 financial crisis is clear. When the paper market collapses and the real demand for physical metals is exposed, prices can skyrocket. Today's artificially low silver prices represent an opportunity for those who understand the metal's long-term value. Whether you're looking to hedge against inflation, invest in a strategic resource, or preserve your wealth in uncertain times, silver is an asset you can't afford to ignore. As Schectman warns, waiting for the right moment to buy could leave you on the sidelines when silver's true value is finally realized. The time to act is now, before the world wakes up to the importance of silver and prices soar beyond reach.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.